Hello traders, good day. This is Emeka, and the purpose of our YouTube channel is to provide traders with valuable information and education they need to excel in the business of trading. Alright, please, if you are yet to subscribe to our channel, please kindly subscribe and turn on the notification bell so that you can be updated when new information, new videos are uploaded. And you can join our free Telegram group. There I provide free chart markups and signals that will help to improve your trades. All right, so today I want to be talking about an important subject because I've got many DMs of upcoming traders asking me what I've passed through in this business and how I've come this way, how I've become successful. So I decided to make this video to improve, to give you some information that you need, some things I've learned over the years that has helped me to succeed so far, to become successful in trading and profitable. All right, so I want to talk about 10 things that has helped me to succeed so far in my trading. My trading journey changed positively forever when I started doing these 10 things. All right, now those are keys, things that I've learned, and which if you can adopt those things, they would help your trading journey to improve and reduce or shorten your learning curve. All right, number one, you need to show up every day on the charts. All right, trading is a business or a skill or a craft that improves, that you improve in it when you keep practicing. All right, reading books won't help you to excel. Reading books without practice won't help you to excel in trading. You need to be on the charts every day. Look at the chart every day. Banks, if you know Banks is one of the most successful contemporary traders so far. He's an American, and I saw him the other day saying that since he started trading, he started learning how to chart. It has never been a day that he has never looked at his chart. Every day he has looked at his chart for many years. Over 8 years he has been in trading. All right, so you need to trade, you need to fail, you need to learn from your mistakes in the market to become good. You need to practice every day. You need to practice every day, not today on the charts and you abandon your charts for the next 1 month, 6 months, and you come back again. No, you need to be on the charts, doing something on your chart, practicing, taking trades. All right, failing and getting up, learning from your mistakes, and continuing to excel. All right, continue to learn from your mistakes, make changes to your trading setup, and you continue. You learn from your mistakes in trading. All right, in trading you fail first before you succeed. That is the way. You don't succeed at once. You fail first before you succeed. But the problem is that most people do not last long. They do not last long, and they do not succeed. All right, so number two, you need to approach trading from a long-term mindset. With a long-term mindset. All right, it takes years, just as I've said in point number one, it takes years to become a good trader. It takes years to become a good trader, just as with other professions. All right, you spend 4 years or more to become an engineer, an architect, an accountant, or a doctor. In the same way, to become an experienced trader, you need years of practice in the market, and to learn, you need to learn under a good mentor. Don't rush the process. Be patient with yourself, even if you're not seeing any progress at the moment. Just keep pushing, keep practicing, keep taking trades. All right, keep taking trades. The market will teach you how to trade. You need to approach this from a long-term mindset. It takes average of 5 years to make a good trader. From 5 years and above, it is almost impossible for you to be a good trader within 6 months. It's impossible. All right, because it takes time to build, to master the craft, to develop good trading psychology. It takes time. It takes failures. All right, to master trading psychology, to master risk management, it takes failures. It takes blowing accounts sometimes. All right, so you need some things are better experienced than learned from the books. So that is why you need to approach trading with a long-term mindset. But once you learn it after these years, you become good forever. You become good, and you thank yourself for not giving up. All right. Number 3, keep a trading journal. There is no way you can monitor your progress if you do not keep a record of your trades. A trading journal is basically a record of each trade you take, the reason you took the trade, and how the trade played out. All right. The setups, what made you to take the trade, the setups. This helps you to keep track of what works and what doesn't work, so you can do more of what works. And it helps to improve your development as a trader. So you need to keep track. You can keep this track. You can have a book, a notebook, or an Excel sheet where Excel sheet where you can a spreadsheet where you can keep record your trades, each trade you take, why you took the trades, the lot size you used, all right, your entry confirmations, okay, and how the trade played out. So this will help you to keep track of your trade, of your progress, and you know what works over time and what doesn't work. Now, number 4, don't chase the market, allow it to come to you. This is very important. Most newbies want action all the time. They want to be taking trades. They want to be taking trades every time, now and then. But that is not how to succeed. Professional traders wait most of the time, and they allow their setup to play out. All right. Professional trading is 90% waiting and 10% execution. But newbies always want to execute trades, take trades continuously, whether it fits in their setup or not. They just want some action. That is a recipe for failure. It's a recipe for losses. All right. Sometimes you just need to stay and do nothing. The market is not providing you any setup, so you sit down and wait. No setup, no trades. All right. You can't put your precious money, your hard-earned money on the line for no reason. So you need to know your setups, wait patiently for them to play out before you enter the market. You don't trade for trading's sake. You rather take trades before you rather trade the market when there is a setup, when you have a strong reason to enter a trade based on your trading system. All right. So you don't chase the market. You allow your setup to play out. Your dots. Okay. You allow the market to, all your entry criteria have been met, and then you can take the trade. So that even when you fail, even when the trade does not work out, but you followed your trading setup, then you are a successful trader. Then you have good reason to relax, because you took the trades based on your setup. Even if it does not work out, it's not your fault. It's not, you must lose sometimes. You must account for losses, so it's not your fault. But when you keep on taking trades, whether or not they meet your setup, then you are not doing well. Then number 5, always think in probabilities. Okay, no trading system gives 100% winning strategy, winning ratio. No trading system gives 100% win rate. All right, all traders have losing trades. What matters is, do you have more losses than wins, or do you have more wins than losses? Profitable strategies do not have 100% wins. All right, all happens is that they have a higher risk to reward ratio, and a considerable amount of wins more than the losses. You need to trade. You only need to trade to win your trade, to win trades more than you lose. All right. If you think in probabilities, the fear of losing a trade will disappear. You know that nobody has control over the market. You must win and you must lose sometimes. All right. When you think, but what happens is that in the short term, your results are random. You can win or lose. But in the long term, if you have backtested your strategy, and you have backtested your strategy, and you followed your entry criteria, over time, you should win if you have good risk to reward. All right. And if you keep taking such strategy, such a setup, you should win over the long term, and you should be profitable over the long time, in the long term. So that means you need to always think in probabilities. When you think in probabilities and keep risk constant, don't increase your risk. If you take 100 trades without increasing your risk, you keep your risk constant, and you traded a winning strategy. If you have a 50% win rate, and you have a win ratio, a risk to reward ratio of 1:2, you will be a profitable trader. All right. So think in probabilities all the time. Number 6, stop comparing yourself with other traders. All right. Everyone's trading journey is unique. Focus on your journey and stop comparing with other traders. You compete against yourself, not others. All right, focus on your own growth. Compete against yourself. Know what you are doing right, what you are not doing right. The indices, the criteria for your growth is keeping to your trading plan. Once you keep to your trading plan all the time, I tell you, you are making progress. In the face of losses, in the face of wins, you keep to your trading plan. All right, you do not increase your lot size when you are winning. You do not take trades that do not meet your criteria. All right, you do not give up. You keep trading your trading system, taking your trading system, taking trades, taking your setups, your entry signals. All right, consistently, you are doing well, regardless of the result. Results don't determine your progress. What determines your progress is your ability to maintain and to keep to your trading strategy. Now, monitor your progress daily and keep moving forward. Over time, you will see how much progress you have made if you stick to your trading plan. All right, very important. Number 7, you must have a trading plan. Just as I've said, a trading plan outlines your trading methodology, which includes your the trade entry criteria, profit taking method, trade exit criteria, risks per trade, trading time frame, maximum loss per day, maximum loss per week. All right, so a trading plan you must have. You must not approach the market without a plan. If you approach the market without a plan, I tell you, you're gonna fail. You're gonna fail. You must have. You don't just take trade because you don't just take a buy because you see a bullish candle. No, you don't take a sell because you just see a bearish candle. No, you must have more detailed criteria as to what you should be looking out for before you take each trade. And you should know when to take your profit, when to exit a trade when a trade is not working out, or when to your risk per trade. In the industry, 1%, maximum 1% risk per trade is advised. All right, how many trades do you lose in a day before you stop trading? How many trades do you lose in a week before you stop trading? A trading plan helps you to be a disciplined trader. All right, a trading plan helps you to be a disciplined trader, and a disciplined trader is a trader who will excel over the long term. All right, discipline in the market, this business, disciplined trader, a disciplined trader will outperform a smart trader. The market does not need smart people; it needs disciplined people. People who can stick to their trading plan, without interference by emotions. Your emotion is your greatest enemy. Your greatest enemy in this business. If you can be emotionally stable in the midst of failure, emotionally stable in the face of losses, sticking to your trading plan, I tell you, over time you'll be a successful trader. Number 8, ensure good risk management at all times. Some traders do not have a constant risk per trade, and I tell you, this will destroy your trading edge. When you don't risk a constant amount per trade, your trading edge will be mesmerized. All right, if you see how the casinos trade, the casinos, how the casinos do their business. All right, they have an edge and they win because they encounter losses but they win in the end because they have an edge and their risk is constant. All right, always calculated risk. Keep risk calculated, constant and low at all times. Avoid over leveraging and resist the temptation to do so. When you over leverage, you mess up your trading strategy. All right, you mess up your trading strategy. You can get away with sometimes, while some people over leverage, that sometimes they try it and it works out, but they don't know that the market will catch up with them later on. You can get away with over leveraging in the short term, but it takes one failed over leveraged trade to ruin your results of many weeks and months. Risk management must be constantly practiced. It must be part and parcel of your trading. You can have a good strategy, but still be an unprofitable trader because of your because you are over leverage. Over leveraging destroys your trading edge. All right, so you must keep risk constant at all times. You must know how to size your position. It's called position sizing. risk not more than 1% per trade. Some persons, some traders 0.5% per trade, depending on your trading strategy. All right, and depending on the time frame you are trading, depending on whether you're scalping, you are day trading, or you are swing trading. All right, if you are swing trading, you might have a higher risk because you don't enter the trade all the time, like 1% per trade risk per trade. But if you are day trading, you can reduce your risk since you take more trades, more frequent trades. All right, so you must keep risk managed and constant at all times. Once you do this consistently, you will see a good result in your trading. Now, number 9, focus on trading only one setup. This is very, very important. Very, very important. You cannot monitor your progress. You cannot see improvement in your progress if you do not take one setup. Just identify one setup, one trading setup, and master it. Trade it over and over again, and know every in and out of that trading setup. All right, you only need one setup to kill in the trading arena. Be addicted to repetition. Keep on repeating that setup. Trade it, fine tune it, trade it, learn, do well in it, and your edge will definitely play out over time. But when you take different setups, you cannot be able to monitor your edge. You cannot be able to know what works and what doesn't work in that setup. Trade only one setup until you master it. You know the in and out of that setup. Trade a setup until it becomes very boring to trade. Trade a setup until it becomes very boring to trade. Once trading becomes boring, it means that it's now systemized. And I tell you, systemized trade or trading system is very necessary for profitable trading. Just take only one setup. When you keep taking only one setup, you are trading like a robot. And you need to trade like a robot to seek success in this business. Most robots trade profitably. Why? Because they don't trade with emotions. They keep taking one setup, the same risk management, the same entry criteria, the same profit taking rules. And that is why over time, even though most robots have losses, but over time the robot is profitable because a robot takes trade without emotional bias. One setup. So you should trade only one setup, master that setup, ignore other setups, become good on that setup, and keep trading it. So far you have backtested this setup before you started trading it. You backtested it and you found it to be okay. You found it to be profitable. Keep taking a setup, keep risk constant, all right, and continue to trade. You might have losses, but over time, if that trading strategy is profitable over time and it has good risk to reward, over time you should seek success after a large sample of trades. All right, if your risk is constant and your wins should be able to cover your losses. Finally, you need to learn from a good mentor. Profitable forex trading has a steep learning curve. However, a good mentor helps to reduce this steepness and shorten the learning curve. You can get tons of information about trading online for free on YouTube. However, proper forex trading comes from a mentor. Money spent in getting proper forex education is an investment. All right, it is an investment. You need to learn. But when you want to learn on your own from YouTube videos and online and all the rest of that, you'll see a ton full of information, and you get what is called information overload, and you learn through trial and error method. This will cost you a lot. This might cost you a lot in trading losses. But when you identify a mentor who is profitable and follow a mentor, your learning curve will be shortened, and I tell you, you should be a profitable trader over time if you are serious and you are consistent. So I provide one-on-one forex mentorship at a very affordable cost. You can chat me up on Telegram at Trade with Emeka. That is my Telegram DM at Trade with Emeka. You can chat me up, and I would be happy to be your mentor. Also, please kindly subscribe to this channel. Kindly subscribe subscribe to this channel. All right, like our videos, share our videos, turn on the notification bell, and you can also join our free Telegram Signal group. All right, our free Telegram Signal group. I provide mentorship contents to there. I also provide daily chart markups, and daily chart markups signals in the group. All right, the link to the Telegram group is in the description box of this video. Thank you so much for viewing, and please keep developing yourself, keep being successful, keep practicing. Over time, you will thank yourself for not giving up. Trading is one of the best businesses you can do in the world, but it takes time to master, and it pays those who do not give up in it over time. Thank you once again for viewing. Do have a profitable and a wonderful day.